Hello, everyone. Welcome. I am Mariah Petzold, and I am here with Jeffrey Isenberg. He is a multifamily investor and a California licensed investment sales agent for Buckingham. Welcome, Jeffrey.
Thank you. Thanks so much for having me, Mariah. It's great to see you today.
Yeah, I'm excited. I'm in Los Angeles and excited to talk about the Southern California market and everything today. So, well, let's start out with telling us how you actually got started in real estate.
Okay, so actually, a very good question, and not the typical answer where someone tells you, "Oh, well, our family's been investing for so many years." I actually was in the corporate world, owned a business for over 20 years in the live event space, renting large screen video displays to clients. So lot of travel, a lot of logistics, a lot of time constraints, and things where you really have to be on your game to deliver these types of projects because when you're up against a live event or that type of schedule, you just don't have the luxury of being able to delay anything you need to do,
Right.
which kind of lends itself very well to real estate transactions. But I'll get to that later. So while I was in this business, I always wanted to be a real estate investor in the multifamily side. However, at the time, I just kind of knew it as being known as income property. So
Okay.
conceptually, it just made a lot of sense. Okay, put down a small fraction of the overall value of the property, have tenants that get a place to live, and it's that income that eventually pays off the loan and pays down the rest of the balance owed on that property. So the thought of, hey, somebody is going to pay 75 to 80% of the value of this property that I'm eventually going to own outright just makes a lot of sense. So that was just, not knowing anything about real estate, that's what I wanted to do.
Okay.
And then as the years went on, and always had, money invested in the business, I wanted to diversify a little bit more. And in 2014, actually set that strategy in motion by dealing with one of our founders, Marty Stone, who's been with Buckingham since, I want to say the 60s. Our broker's been around for 60 years now, since 1963.
Wow.
And as it was explained to me, we looked at how the returns are achieved in Southern California, and we looked at the numbers, cash flow not being a major component, but what we were really focusing on was equity and building your net worth. And I'm like, you know what? This just makes a lot of sense, to the point where I hate to use the term no brainer, but that's exactly what it was. I'm like, okay, I get the numbers. This looks great. But owning property, I'm not so sure, right? We're going to have tenants, we're going to have
Yeah.
turnover, we're going to have all these problems, and who's going to deal with it? So that kind of gave me pause. But I was able to take advantage of our brokerage's referral network of professionals. So lenders, property managers, leasing agents, all these things. And it was just like, well, you don't have to worry about all that stuff because there's a whole, group of people that deal with those day-to-day things, and you can be as removed from it as you like. So finally made the plunge, and ended up being an investor, and started off with a 4 unit property in North Long Beach that I actually still own today.
Okay.
And I just really, really liked real estate. I liked the numbers. I liked um, solving problems, analyzing deals. And I did have the opportunity to sell my share of the business in 2017. And I did that and decided to focus full time on real estate. So not only do I work as an investor, but I work helping other people do what I did, but obviously at a much higher level than where I started. So when I look back on what little information that I had to get into the market, I'm just like, wow, maybe that helped me, because there was no analysis paralysis. It was just so simple and straightforward that there wasn't a lot of noise coming from different areas, right? Like now, real estate is so popular for an investment. You're hearing about syndications. You're hearing about, well, should we be buying mobile home parks? Should we be doing warehousing? Should
Right.
we be doing multifamily syndications? Should we own in state, out of state? What's the best area? I didn't have to sift through any of that. It's just like, okay, yeah, this makes sense. I like the idea of owning, where I live in Southern California, and just kind of jumped in with both feet, and it's been great. It's been absolutely fantastic.
Well, you mentioned your 4 unit in Long Beach. So, as far as your personal portfolio, is it all kind of in that same area? Is it all in Southern California? Where?
Yeah, definitely. So definitely Southern California, because I believe in the market, and
Mhm.
that's actually what we've built an investing model out of. And I know you're familiar with how we work and how we do that, but it's such a good way to build your net worth over time as you keep building up your equity and re-leveraging as appropriate. Where I'm like, you know what, Southern California is great, and we do like some of the other incorporated cities outside of LA City, just
Mhm.
because you just have kind of more flexibility, with respect to how you run the building, and rent increases and things of that nature versus LA City. So the great thing about that 4 unit is that over time there's been several refinancing, there's been equity that's reallocated. I'm in partnership on a much larger property in the area as well. And I think what's also really exciting as my strategy starts to become more diversified, definitely going to be doing more on the value add side, and really trying to force those appreciation numbers in a shorter amount of time, which our,
Right.
our market does allow us to do. And that's what the bulk of my clients are doing as they approach their portfolios as well.
Mhm. Do you find that most of your clients are California residents as well? Is it mostly people that live here that are trying to invest here?
Yes, I would say that is indeed the case. So I'm working primarily with business executives, professionals, um, just entrepreneurs, people that are just kind of maybe disenfranchised with traditional investments, stocks, bonds, mutual funds. You're looking at, you know, everybody's happy if they can average 7% return on those. But real estate investors want more. They know that that's available to them because they get to use leverage, right?
Right.
So a smaller down payment of a much bigger asset that is appreciating over time. And our brokerage does do the data. We're education centric. And we're able to look at it. We're able to see, okay, well, if we go back, 60 years and look at our annual rate of appreciation and how that compounds, we actually have a number that smooths out all the volatility of the last 60 years. And in our local market, it's actually right around 6.5%.
Mhm.
So obviously, it's a long-term average. There's years where the market's going to go down, and there's years where the market is going to go up, exponentially. And
Right.
that's where the money is made. So if you're willing to be in it for the long term in this market, you're going to make a lot of money, and you're probably going to make a lot more than in other markets, just getting a higher percentage cash on cash return. But
Mhm.
every investor has a different criteria. So there's no right or wrong in real estate investing. You just have to follow the path that works for you. So whether that's in state, out of state, what the asset class is, people are making money in so many different ways that you just really have to know everything there is to know about the investment that you're making.
Right. Yeah, absolutely. And, when you're deciding markets and investment strategies, you also have to, figure out what you have to invest. So as far as California and California prices, kind of the barrier to entry is a bit bigger here, and I think that that can be kind of a scary thing. So, how do you see that? I guess.
You know what? It's interesting because I do see it the same way, and I have a lot of people that want to start out. of all age groups, people in their 20s, 30s, 40s, 50s, and yes, the cost of entry is a challenge, but it's amazing. And kind of like what I love doing is I love problem solving and I love the number side of it. So if somebody has a lot, less money and maybe thinks, okay, well, maybe this market's not for me. We can't invest here. It's just too expensive cost of entry. We're able to look at it and say, okay, well, wait a minute. Have you thought about a house hacking strategy, like maybe doing an
Yeah,
FHA loan, getting into a duplex, occupying a unit, having a tenant offset your loan and your mortgage and your expenses?
very
Because
popular. Yeah, that's great.
yeah, a lot of these people are paying, two, $3,000 a month rent in an apartment, and they're not moving forward in their goals. But they're like, hey, I have $80,000 saved up. Well, sure, you're not going to buy a 4 unit property on 80 grand with a 25% down payment. But if you're looking to occupy a unit and you're getting income everywhere else, it just might work. And the
Mhm.
beauty about the appreciation is you get the appreciation on the whole building, not just your down payment, right? So if you're going to, you know, get in for a small sum of money, and we've done that with our clients. I can think of several that did 3.5% FHA loans on eight and $900,000 properties. I mean, the down payments were like $25,000 plus closing costs and any rehab needed to get those units up to market rents.
I love that.
And there's some people that for under $100,000 own real estate that's positively cash flowing if they were not to live there.
Mhm.
So there's all different entry points. There's joint ventures. There's people you can partner with. I have some great clients that are actually doing an investment fund where their strategy is ADUs,
Oh,
um, building those, turning them into short-term rentals, 30 days and up. And so you can earn returns in all kinds of ways in this market. So it's really just about learning what's available to you and
mm,
kind of comparing and contrasting those returns to what you see in other markets. And then your investment path becomes very, very clear. Um, in my mind, you just kind of have to follow the numbers, right? You also have to know the markets you're investing in, but the numbers will tell you the story. And once you can kind of get a handle on that, the path becomes clear. The decisions are not complicated. And that's what I love about real estate.
yeah, and not that we have a crystal ball, obviously, but, given the market that we're in currently, what do you see? What do you think? Because I know that your company does a lot as far as looking back at history and looking, at all of the statistics as far as California and the growth and everything. So what do you think we have in store for us as far as this year and kind of next year maybe too?
Yeah, no, that's a great question. And by saying you don't have the crystal ball, neither do I. So I can tell you what I think is going to happen,
Yeah.
but it doesn't mean that's what's going to happen. We're just kind of looking at the data really closely, quarter by quarter. So what we did see is we did see prices come down in Q4 of 2022.
Mhm.
Pricing is off about 8%. So definitely not falling off the cliff that everyone's been talking about. I mean, since last summer, people have been panicking. There's been, all these sensationalist headlines about the upcoming crash and how unstable things are. And I choose to look at that as a lot of media rhetoric. It's not to say that everything's going to be fine and stable, but I mean, if you're going to go off of the headlines, by the time you're ready to invest, we're going to be back in the market where every property is getting 14 offers and the price is going up 17% a year, right? When you actually feel confident enough to put your money in the market. So we saw pricing go down in Q4, but we also have the benefit of our Q1 2023 market study already. And guess what? Pricing is flat. It is not further eroded one bit. What we are seeing is the transactional volume is way down because lending is starting to tighten up. Everyone's worrying about what's happening with the banks. And,
Yeah.
you know, it's really a question of not buying into any one narrative. So we have a lot of lenders and lender partners, and I was just talking with a lender yesterday. They have their own in-house product that's absolutely phenomenal, where they're like, okay, well, we can look at commercial loans on 2 to 4 unit properties. There's actually no prepayment penalties, so we think rates are actually going to start going down as we get towards the end of the year and into 2024. But, one of the phrases around the office is, doesn't really matter because you're going to marry the property but date the rate. So if you can
Right.
figure out a way to make that work, you just leave yourself long enough of a time horizon to push that value, to stabilize, to get more rents where you can go back to the well and do a refinance and supercharge those returns.
Hmm.
So, at the end of the day, yes, things could soften up potentially more, but it's to me, it's like dollar cost averaging. If you're in it for the long haul, and you see a deal where you can make money based on a stabilization plan, and you know the way in which you can make that property perform and you can execute successfully on that plan, who cares what the headline says, right? If you can figure out on that loan structure how to make that property perform, why wouldn't you buy it? Because you don't know when the market's going to go up. And if you'll indulge me in this small example, everyone thinks that interest rates going up means property values have to go down. It's not the case. In the 1970s, we saw multifamily pricing went up significantly while interest rates were also moving up within the same direction. So interest rates in the 70s went from the 6% range right up into the 17% range by 1981. And if you want to know what happened to multifamily real estate in our, local market in Southern California, it went up 406%, which absolutely defies any type of, logic or crystal ball. And it's like that was still the greatest real estate run up of the last 60 years was in
Yeah.
the 70s while interest rates were through the roof and inflation was going crazy. So even now we're seeing rents soften, but they're not going down. They're still going up, 2 and 3%. And you have to kind of have that property and be invested to take advantage of the next run up. You know, 2019, people thought that the recession was coming. And then COVID came. So you could say, okay, well, that was a terrible time to buy a property. Well, history shows us otherwise. So you just really have to kind of execute on your plan, trust your numbers, be in it for the long run. And it's a long game. If you're going to do that, you're going to be successful regardless of what market we're in, regardless of what the next, media article is. I mean, even with all the talk about, instability with the banks, that's, the gloom and doom, and that we haven't fallen off a cliff there either. And it just, the fundamentals to me just don't support that.
Yeah. Yeah, absolutely. I mean, California is it's very unique place to buy and to live. There's so many people that want to come here for our amazing weather, and I don't think that that's going to change anytime soon. So I don't
Yeah,
think we're going to have any. Yeah.
no,
I
for
love it.
sure.
Well, so what are some of the unique challenges that you face as far as being an agent here in Southern California?
Well, it really depends. I mean, a lot of the work that we do with clients is, we do a lot of education, we do a lot of networking, and I think that people kind of come to you with some preconceived, ideas, how they already feel that real estate in California works a certain way. So my favorite one is, well, you can't cash flow in California, is
Mhm.
what people say. And we're like, okay, well, let's kind of take a look at that. Like what's the challenge here? Well, people don't want to invest because they think they can't get a cash on cash return. But
Right.
we're of the opinion, and we're able to show it in our modeling, that over time, not only will you get the appreciation on the value of the property, but don't forget rents are appreciating here. We still have inflation. We have a profound shortage of available rental units to the point where in our lifetime, they can't build their way out of it. It's not going to change. And, all the new construction is all, A-class properties. What about the people that just need an affordable place to live? We have, vacancy rates, in the 3% range. So virtually, anything that, you have a unit, it's going to turn, you're going to get that rented out. And, we have a very strong local economy. We don't have any more land in which to build. The market fundamentals to me are in place. So I don't want to say that we want to tell people they're wrong or that they're mistaken, which isn't the case, but we want people to kind of see it through our lens a little bit, maybe
Yeah.
challenge their thinking and say, okay, well, you're saying this, that, and the other thing, and I can appreciate that. However, have you considered all these market fundamentals of maybe why you're going to end up, most likely doing really, really well here? So we just want to get people to be able to see the big picture, show them some case studies, carve out a pathway to making those properties really perform.
Hmm.
And if investors have the buy-in where it's like, oh yeah, this is great, this is what I want to do, then we're like, okay, great, let's do it. And if everyone's like, no, it's too expensive for me, and I'm just happy with, 8%, cash on cash return in some other part of the country, well, that's great too. You're still making money. You're still going to outperform the stock market in the long run if you, buy your real estate right, no matter where you do it. So it's whatever strategy is going to work well for the investor. But we just want people to at least see what's available to them and make their own decision.
Sure. I think a lot of it comes down to no matter if you're investing in California or anywhere, it's all going to depend on location. What neighborhood are you investing in? What areas are you investing in? So that kind of brings me to my next question, really, in Southern California, Los Angeles being such a vast area, where are some of the areas that you think we should keep an eye on as far as like areas to invest that you see right now for a big potential?
Okay, fair question. Well, we do have a specialty in and around the South Bay area. We love Long Beach just because there's been so much institutional investing there. We're seeing the big condos, we're seeing the mixed use commercial, we're seeing even areas like North Long Beach where, oh, they're building 82 townhomes with beautiful retail space. And it's like, you know what? If developers are putting hundreds of millions of dollars into the area,
Hmm.
that's probably where you're going to want to piggyback on those transitioning neighborhoods. So we're seeing that all over Los Angeles. Like, I don't care what neighborhood you're talking about, there's really something happening there right now. Look at Inglewood. We have a lot of our clients
Yeah,
investing,
it is
in and around.
blowing up. It's been just so busy over there for the past couple of years now.
Yeah, but if you look at what they're building, I mean, it's all Class A. I
Yeah.
mean, Hollywood Park, shopping, restaurants, office building. I mean, it's all online if anyone wants to look at what's going on at Hollywood Park. I mean, just the A class, apartments and residences that they're building there. How can you not do well if you're buying a 4-unit multifamily within a half mile from that area? How could that area not pull everything up around with it? So those are my favorite areas. However, there's other areas where there's not as much going on, but it just seems like the whole city's going up. I have clients that own in South LA, that own in East LA. And you look at some of the areas and some of the properties, and you're like, oh, well, why is somebody going to buy this? Well, you've got a client that closed on a little 4-unit in East Los Angeles for under 850,000 that's cash flowing $1,000 a month. And he's not even at market rents right now.
Yeah.
Like, he just has to sit pretty and wait for his turnover and wait for the rent appreciation. And eventually that's going to be a cash out refi or a 1031 exchange into a larger asset. And that equity growth is going to provide for a much larger portfolio in which he can cash flow off of in retirement. So even if it's 3 to 5% cash flow, if you've got $20 million worth of real estate equity, I could live pretty good on that every year. And I'm sure most people can as well.
Absolutely. I would not complain about that at all.
Yeah. So that's welcome to the Southern California market. That's what investors are doing, and that's how they're earning their money.
Yeah, absolutely. Well, let's talk about kind of how you are growing your database of investors, because our audience right now is agents, and I know because I've been to one of your meetups that you do a lot as far as educating people on investing in Southern California, especially in these multifamily investments. So, kind of talk to us about your strategies on bringing investors.
Yeah, happy to share that with you. So, at the end of the day, anybody who is, working in real estate, working as an agent or a broker, so much of the business is comes from referrals. So it's
Mhm.
really about being in the business for the long term, right? So we want to work with our clients, we want to help them grow, and we're kind of invested, not financially, but in their success. Like the better of a job that we do for them and the more that we can help them, the more they're going to lean on us in the future. So I would say to anybody in the investment agent space is just, get out there, educate yourself, roll up your sleeves, make sure you bring all the information to your clients and their transactions, kind of to make sure that they're not going to make a mistake. And you certainly don't want that to come back on you, something that you overlooked.
Right.
But as far as kind of getting those investor clients, it's exactly that. We like to educate. We give free seminars. We host and attend networking groups where we belong to professional associations. Anything that you can do that's going to get your name out there and meet more people is going to positively affect your bottom line. So if you can kind of blend your personal interests, activities with real estate, it just becomes a natural extension of who you are and actually becomes easy, right? So if you um, whatever, if you're active in your kids' sports teams and you're hanging around other parents, maybe you're talking about what you do and maybe they have a natural curiosity and next thing you
Yeah.
know you're setting up a meeting to talk about buying some real estate. So it just comes from so many places, but you've got to put yourself out there, you've got to get out of your comfort zone, and you've got to work at it, instead of sitting on the couch watching that game. Get on over to that local investor club and go talk to some people, go share your knowledge, go learn from others, expand your network. And that's really all there is to it.
Yeah, I love that. I love that, networking and education. And those are
Absolutely.
two of the biggest things that are going to help us grow our businesses. So, well, do you have any last tips or words of advice?
I would say, yeah, I would say for anybody that is an investor agent or wants to become an investor, just get out there and really know your market, find out what's going on. Don't be too easily swayed by the cocktail party talk of the world coming to an end. And there's been so many opportunities that I've seen in the last 3, 4 years while everyone was just waiting for things to fall off a cliff. And
Right.
that just didn't happen. So, if you're going to be on the sidelines in fear, well, you can't move yourself forward. So even if you do move forward and you do make a mistake, well, maybe that's okay because you're learning and you're going to do it better next time. You're just one step closer on the journey.
Yes, thank you. Well, so if our viewers want to find you and they want to learn more about you and your company, how do they find you?
Okay, great. Well, you can find us in a lot of different places. So on meetup.com, you can look at Multifamily Investor Network Los Angeles. So that is a meetup group that I host outside of Sherman Oaks. I also have a profile on Bigger Pockets, which I'm sure a lot of real estate investors are familiar with. And you can also reach me via email, which is first name dot last name at buckinghaminvestments.com. And absolutely check out our website. We have a lot of investor tools, education, and I think you can connect with me directly through my profile on the buckinghaminvestments.com website as well.
Okay, wonderful. And I will put some of those links below here in the comments below the video. And thank you so much. This was such a wonderful little deep dive into our Southern California market out here and investing.
Yeah, thank you for having me. It was great, and it's always great to see you, Mariah.
Thank you. All right, everybody. Thanks so much for watching. We'll see you next time.